All right, welcome to Art FS. Today we'll be doing who are the major market participants. Last time we did what is forex, so that is how we'll be doing it using our table of content. The next one is who are the major market participants. So under who are the major market participants, this is what you should expect. All right, number one is major market participant. Number two is what is the role of central bank in the forex market. Number three, who moves the market the most. And number four, who moves the market the least. And what is the role of retail traders. All right. So let's go. Number one, which is major market participants. Let's go. The foreign exchange market participants can be categorized into six groups: the central bank, the government, the financial institution, the hedgers, the speculators, and the retail traders. Then let's start with the central bank. The biggest stakeholders in the market are central bank and the government. The central bank are the most influential players in forex market. The central bank monetary policy generally outlines the particular country visions for growth, how they are tackling issues like deflation, inflation, and their position on interest rates. All right, it is very important to know that the central bank position is on the interest rate because this is what determines the money supply for the country and its currency rate globally. All right. So when you decide to trade the news, you must make sure to pay close attention to any high impact news that has to do with interest rate. All right. Actually, I don't trade news. I don't trade news, but because of teaching, I'm going to teach everything so that you can choose the particular side, the side you focus on. All right. The If you want to trade news, you should focus. Make sure you take note of all these, which are the FOMC, that is the Federal Open Market Committee, the Central Bank Rate Decision, the GDI, which is the Gross Domestic Income, the CPI, which is Consumer Price Index, and unemployment rate. So anytime you want to trade news, make sure you pay attention to all these news release, especially the FOMC. You know, you can Google about FOMC concerning forex, then they will explain more on that. So let's go number two. We have the government. The government indirectly regulates exchange rates because most currency exchange rates are set on the open foreign exchange market. In some countries like China, the exchange rate is fixed and the government directly controls it. Alright. Don't forget to subscribe. Don't forget to turn on the notification bell. At FS got you. E go loud. So let's go. Financial institutions. Interbank system provide most volume that causes the market to move the way it does, and that is why major holidays are not the best time to trade. Interbank markets are made up with the following bank. We have the Citibank, that is CITI Bank. We have the JP Morgan Bank. We have the Barclays Investment Bank, etc. These banks are the key players that provide the most volume that causes the market to move the way it does. It is very important to understand this because they are made during major holidays and certain seasons such as the summer. The market does not behave normally, and this is not always the best time to trade. All right, that is self-explanatory, so I'm not going to explain that. Let's move on to hedgers. Hedgers hedgers protect companies from major losses while doing foreign trade. All right, it is also a strategy used to protect one's position in a currency pair from an adverse move. Example of hedging, for instance, if an investor holds GBP USD long, they short same GBP USD. All right. So the fifth one is speculators. Who are the speculators? They are sophisticated risk-taking investors with expertise in the market in which they are trading. Too many people. Okay, before I will say that, let me explain this short reading here. So I think most of us we are speculators. Like let me use Jeffrey Benson. Jeffrey Benson just trade only one pair, which is GBP USD. And okay, two pairs, GBP USD and Euro USD, but mostly it's GBP USD. All right. What they are saying here is if you come to the forex market, especially let me say new forex traders, they are always wanting to trade all the currencies, and that is very bad. For me, I would advise you to just you are free to trade everything, test everything, then but in the long run, make sure you choose the particular pairs that is best for you. And this pair you're choosing, don't make sure you don't choose more than five pairs. Five is actually too much, but don't choose more than five pairs. All right. Two is better. Three is good. At least when you focus on these two or three pairs, you will know what that particular pair is doing at any given time. All right. It's just like having too many girlfriends. When you have like 10 girlfriends, you'll be confused, especially during February 14. What to buy for this one, what to buy for this one, how to impress this one, how to impress this one. So it will be very hard for you to study all of them. All right. So, but when you have just a girlfriend like me, just one girlfriend. So you know how to manage her, you know how to give her monthly allowance, you know her character, you know her need, you know everything, you know her behavior. You are studying her so that you get married to her. That is how you're studying your peers. Maybe only GBP USD, you know what GBP USD is doing in daily, monthly, and yearly. So and everything you're doing is just GBP USD. When you're focused like that, that means you'll be more profitable because you know all the move in GBP USD. All right. So let's move. Too many people want to come into the forex market and trade 50 different pairs. Stick to a few, become an expert at those particular markets. These investors are called speculators due to their tendency to attempt to predict price changes in more volatile section of the market, believing or speculating that a high profit will occur even if market indicators may suggest otherwise. Famous speculator George Soros, he earns $1 billion in less than 1 month. You can Google about him, George Soros. Alright, let's move down to the list. Who are the retail traders? Retail traders include people who do not trade for companies, who also use risk management strategies and hopes for personal gain, and they don't have a major role in deciding the trend. It is very essential to know that retail investors are at the bottom of these two points in the forex market. And who are the retail traders? We are the retail traders. We trade in a small amount. Immediately you're trading $20,000, $30,000, you are still a retail trader. The advanced like big traders are the banks, as I said earlier. They move the market. We just follow what they are doing. We follow what they are doing by analyzing chart, following the chart pattern, following the trend that they have already created in the market. All right. Thank you for listening. The next we should be going using our table of content is what is traded in the forex market. That should be the next class. See you in the next class. I give you within 3 to 4 months, you will see your results. You start earning money. All right. And as you're watching this video, don't forget to subscribe to my YouTube channel. Don't forget to turn on the notification bell and comment if you have any question from the lecture. All right, we have started the journey. We are not going to quit.